Good afternoon. Welcome to Crypto Today, the daily update on the cryptocurrency market. Today is February 18th, 2026. The market faces another day of selling pressure, with Bitcoin retreating to levels near $67,000 amid a global risk-off environment. Let's analyze the current numbers in depth, the main news of the day, and the implications for the next moves. Bitcoin is trading around $67,000, recording a drop of approximately 2% in the last 24 hours. This movement reflects consolidation after testing lower supports last week, with a positive correlation between Bitcoin and the Nasdaq index, indicating that the pullback in technology stocks is directly influencing the crypto sector. Ethereum remains near $1,917, with a reduction of about 1.5%, holding in a critical support range that, if broken, could intensify sales. The total market value of the crypto sector is $2.4 trillion, with a negative variation of 0.3% on the day, representing an accumulated loss of more than $1 trillion since last year's peak. Bitcoin's dominance remains close to 58%, showing it continues to be the main refuge in times of volatility. The Fear and Greed Index continues at extremely low levels, around 8 points, signaling extreme fear in the market, a drop of 2 points from yesterday and 3 points over the week. Historically, these oversold levels, as seen in 4-year lows, often precede recoveries, but require catalysts like institutional inflows to materialize. Let's go to the most relevant updates of the day, with details on their contexts and potential impacts. First, the crypto market slid alongside technology stocks and gold, with Bitcoin falling to levels near $67,000. Meme coins led the losses among altcoins, with more than 85% of the top 100 tokens in the red. This dynamic reflects a broader risk-off movement where the Bitcoin-Nasdaq correlation turned positive, suggesting that macroeconomic concerns, such as persistent inflation, are weighing on risk assets. The impact could be prolonged consolidation unless U.S. economic data brings relief. Second, Peter Thiel's Founders Fund sold its entire stake in the Ethereum treasury company ETHZilla, as revealed in an SEC filing. This occurs amid pressures on ETH treasuries, highlighting a strategic exit by high-profile investors in a bearish market moment, which may signal greater caution among venture funds. Third, Harvard University increased its exposure to Ethereum, buying positions in the iShares Ethereum Trust Fund worth $86,800,000. This reinforces institutional interest in diversified digital assets, even in a correction scenario, and may encourage other sovereign funds to follow suit. Fourth, the DeFi protocol ZeroLend shut down operations after 3 years, citing thin margins, inactive chains, and growing security threats from hacks. With a 98% drop in total value locked, this highlights the challenges of the DeFi sector, including security risks and low liquidity, potentially accelerating consolidation where only more robust platforms survive. Fifth, Standard Chartered revised downward its forecast for Bitcoin at the end of 2026, now estimating a close at $100,000, a one-third reduction from the previous projection of $150,000. The bank warns of more short-term pressure, with possible testing at $50,000. Due to macro factors like high interest rates, this conservative view may influence institutional investors to delay entries. And to close, real-world tokenized assets, known as RWAs, recorded a growth of 13.5% in the last 30 days, driven by activity on networks like Ethereum, Arbitrum, and Solana. Despite the overall crypto market decline, this signals growing maturity, with volumes comparable to global payment networks, and may attract more traditional capital to the ecosystem. In a deeper analysis, we are in a consolidation phase after a deep correction of about 45% since the peak of October last year, similar to cycles in 2018 or 2022. Key technical supports for Bitcoin are around $65,000, while resistances appear between $70,000 and $72,000. For Ethereum, the range from $1,950 to $2,100 is critical, with chart patterns suggesting potential rally if support holds. The extreme fear in the index suggests the worst may be passing. But sustainable recovery depends on consistent institutional inflows, regulatory clarity, and improved retail sentiment. I ask, does this represent a classic bottom, or just a pause in a longer downtrend? A strategic evaluation based on fundamentals is essential now. Summary of the day: market under selling pressure with negative macro correlations, but positive signals like Harvard's institutional actions and growth in RWAs offer counterpoint. Tomorrow, we follow more economic data. If this content brought clarity to the current scenario, leave your like and subscribe for the daily update. Comment below. Do you see this as an entry opportunity, or you expect more volatility? Thank you for watching. Stay tuned and see you tomorrow.